Hello, everyone. Good afternoon. It is Monday, about 12 noon. This is Neil Yeager, one of the content providers, trade room moderators at Simpler Trading. If you can hear me okay, if I could get a mic check. I'm broadcasting this in various locations, and also, additionally, it is being recorded. I believe it's going out over YouTube, and that would have the recording available afterwards, likely at the Simpler Facebook page and probably on YouTube as well. Um, the subject that I was asked to cover today is how I go about preparing for the day, things that I look for to try to decide, what I'd like to have as a plan. I believe a plan, by the way, is a good thing. If nothing else, if you have in mind, if then that, if up then I want to target that, if down then I want to target that, right? Either way. But if you don't have a plan, I believe it would be easy enough to find yourself in a trade, maybe take 2 points out of what ends up being a 25-point move. You know what I mean? And if you have a plan, at least you know what you're trying to hold on to and for and why, right? So here's how I get started and what I've got on my mind. Like, for instance, I'm looking at my notes from this morning, right? And some of the things that we went through in the room this morning. I said, hey, we know that OPEC had the meeting over the weekend and announced some additional cuts. We talked about late last week, don't be short energy over the weekend. The last time they went into this meeting, the crude opened over the weekend, gap up like $4. So that'd be reason enough to kind of stay away from that idea. Additionally, we'll look at the calendar late last week and kind of prepare for what the week ahead, looks like. We then go and look at it again this morning, and that's what we did. I'll show you how in just a second. We take a little snapshot of things from a 30,000 foot view just to have an idea of, well, a question that we used to ask in my little homework group we met every day after the end of day to prepare, well, go over what the day's trading and prepare for the next, was to ask a question. What does this thing look like it's doing overall? How good a job is it doing in accomplishing that, what you think it looks like it's doing? And with that, where does it look like it's headed to us as a group, right? So we come up with some targets. I'll show you that what I mean in a minute. We discussed this morning the fact that year to date, the NASDAQ is up 30% right now. The S&Ps are up about 12. The Dow's up about 2. Bitcoin's up 64%. And oil is actually down on the year, 4%. It's up today, but overall for the year, it's actually down 4%. And here's an idea. Like, let's talk about the S&Ps, for a second and say, what's the overall landscape here? Well, I said, hey, would you believe if I told you that the midday print, the 1230 print for the last few days last one was 42.93. The one before that was 42.25. And the one before that was 41.88. Sounds to me like it's moving definitely to the upside and with relative ease at that, right? I mean, 3 days ago, the midday was 41.88. Then it moved up to 42.25, and then it moved up to 42.93. So definitely progressing in an upward direction, right? So I'm going to get ready to try to build what I'm going to show you now. I'm going to get ready to try to build this. This is a plan, right? This is how we come up with a plan for the day. Notice I've got targets on here, like where's my target? Right here, 43.08. And if it can get past that, then it'll be 43.27. And the reason for that is that's the high for the first half of last year. We have a reason for it, etc., right? But we'll get to this in a second. This is what I'm trying to accomplish, though. I'm trying to accomplish coming up with a plan for If then that. If up, target this. If down, target that. And if you're going to say if up or if down, then that, my opinion at least, it would be good to have a line in the sand that says, okay, well, above here, we like it, this is strong. Below there, watch out, could be getting weak. Line in the sand, right? And that's what I've chosen here for today, about 87 in the ES, 87 ES, not SPX, but ES. And you'll see I've got reasons for, I'll get to this in a minute, but I got reasons for why I would choose that as, the over-under. Okay, we'll get to that. So here's where we start with the 30,000 foot view. And that is, I'll go, you don't have to do this every morning because this isn't going to change that often, but I'll go all the way out to a weekly chart and ask myself, is this moving up, down, or sideways? I mean, what's the lay of the land? What's the landscape? Is it up, down, or sideways? I mean, if you're in the middle of some overlapping choppy type trade, then you can expect to be in a choppy environment. But if this thing's moving either up or down, then that needs to be my primary scenario or preferred case for the day. Remember, I don't care if it goes up or down. I got a line in the sand, but if this thing is trending higher, then I want to give it the benefit of the doubt as this is the path of least resistance, right? So how will we define a trending environment? I think first of all, you have to go to be time period specific. You can't just say, oh, it's trending higher. Okay, on what time frame? Monthly, quarterly, weekly, daily? What? 5-minute chart? What are we talking about, right? So and then have a way to define trending price action. I would submit that if something's making a series of higher lows, we call that one-time framing. If something's making a series of higher lows, well, it's moving higher. It doesn't necessarily have to keep with immediately higher highs, but if it's making higher lows, it's moving higher. And the same would be true for the inverse, and that is if something's making a series of lower highs, well, then it's one-time framing down. That's actually trending lower, right? And then you do the best you can to try to spot the change of that behavior. But as long as something like on this weekly chart right now, this thing is moving higher on higher lows. So I would submit to you that this on the weekly chart, this thing is trending higher. Then I'll drop down into a daily and ask the same question, nothing different, same question, making a series of higher lows here on the daily chart as well. And looks like, to me that needs to be if I'm going to give it the benefit of the doubt, I'm going to say, well, find me a line in the sand, see if I can put my back against that, defend it, and try to determine now what are going to be my targets, right? And so we'll get there. But first, then I want to know what I need to be aware of today. And for that matter, this week on a Monday, but at least today, every day. On a Monday, I want to know what I need to be aware of for the week. You can do that by going to forexfactory.com. That's all you type in, forexfactory.com. And it's going to highlight for you the real important things about today. Like tonight, the Aussie RBA rate decision will be determined. But today, during the day, we knew in advance that we needed to be prepared for this ISM Services PMI number at 9 a.m. Central, 10 Eastern, because it prints this in the little red folder indicating high impact. So anything in red, like this CPI up here, or the U.S. ISM Services, or the Aussie rate decision, those are things that you want to certainly have on your radar. Now, since it's Monday, I would also show you this. We'll go up here and just hit this button right there. It says calendar. I'm going to click that. And what you'll notice now is it gives me the entire week in a glance. All right, so I can see, all right, Monday, nothing much terribly going on until 9 a.m. I've got this service. Well, ECB President Lagarde was speaking this morning as well. You see that on my notes in a minute too. So I've got today, I put on my notes that ECB's Lagarde and for the ISM services, and to be prepared for those. So while I'm at it, and since it's Monday, I'm gonna go ahead and just kind of glance out here and see what else is going on during the week. I see a CAD rate decision on Wednesday. I'm not really seeing anything terribly. I'm looking for anything really on Tuesday. I don't see a lot. Really, all in all, this week is pretty light, to be honest with you. It really is not a lot going on. I mean, I don't see like a parade of Fed speak in here. We don't have like an FOMC. We don't have a CPI or a big, something like that. So it's pretty light all in all. But there is an Aussie and a CAD rate decision Thursday. Then this is not a big deal. This is a weekly thing. But anyway, Thursday we do get unemployment claims. Not a big deal since it's a weekly thing. But nat gas, not a big deal. It is to me because I'm in nat gas, but it won't be to the rest of the market. And then Canadian jobs on the 9th, whereas we just had the U.S. Non-farm payroll last Friday. So, and by the way, here's something that I've been doing this a long time, so I pick up on little things that tend to kind of matter and happen and make a difference. I notice that the day after a non-farm payroll report, the Monday today, is often just about as boring as anything you can possibly stand. A market that tries a little bit lower and a little bit higher and settles in the middle, and you wonder at the end of the day, you scratch your head and wonder why, like what? So anyway, at a glance, I'm looking here at the fact that we had one thing that was very important this morning, so I put it on the notes, and then the rest of the week looks relatively bland. Okay. So we're starting with how do traders. No, that's a good question though about the Trader's Almanac. I don't have a copy of it right now, but when I do have it on my desk, I will refer to that too and see what historically today kind of has been in the past as well. It's a great question, but I don't have an almanac on my desk right this minute. All right, so here's what we've done. We've looked at a weekly chart determining that it's moving higher, lower left to upper right on higher lows. We've looked at a daily chart and determined that it's moving higher, lower left to upper right on higher lows. That means we're in somewhat of obviously a current state of the markets would be bullish. That means that we're still going to drop down into developing a plan for today, but we're going to try to give things the benefit of the doubt in a preferred scenario, right? So here's where I go next. Then I do. Now, here's what you want to do in building something like this, something like, a daily plan like this. I'm going to submit to you that I believe you'd want to try to do it pretty consistently around a time of day. Like, for instance, pick a time. I don't care if it's 7:30 in the morning or it's 8 o'clock in the morning, but for me, I do it around 8. And the reason for that is because I'm going to take a snapshot of what the overnight volume and range is, and then I'm going to go to the options chain and get a look at what the expected move is for today. But if you pick just a time of day and you're not consistent with that, then what significance is that volume if you're not doing it relatively essentially around the same time? When I do this, I do it 30 minutes before the bell and I take a look at the volume and the range. That way I get a feel of how well participated the overnight trade was. This, I can tell you, is pretty light. 150,000 contracts traded on only 13 points of range is very calm and subdued on both levels. 200,000 on 25 points to 28 or so, 25, 28 points, that would be normal. If I tell you that I know what normal is, then, and I do because that's about normal, and then I look at it this morning and it's only 155 on 13, then I look and I say, that's pretty bland. And that tells me a little bit about what I can anticipate for today, because if it was that anemic in the overnight, then why am I to imagine that all of a sudden, things are going to matter once the bell rings and, everybody's going to want to participate now, but didn't care last night. Didn't care during the European session, but all of a sudden things are going to change. It just doesn't usually work out like that. So you get north of about 225, 200 on the volume, 25 on the range. You've got your sights set on a pretty active day. And we're 30 minutes. The bell we're not even anywhere near the market open yet. And you've already got a pretty good idea of what kind of day you're thinking this, could well turn out to be. Very active or not so much, right? All right. So then here's where I get that information. We go over here. We just go to your watch list and we go to the ES and we look at the volume. 952 right now, but this morning at 8 o'clock, that was 155. Okay. I'm going to go, I like this chart for this purpose. I go here, include overnight trade so that I'm looking at the overnight session. And until 8:30 this morning, which is right in here, until 8:30 this morning, well, let's zoom in so you can really see it. There we go. Here's your overnight, right? All this stuff Sunday night into everything up until 8:30. So you can see the high of the overnight was about 93 and the low was 80. That's 13 points of range on 155,000 contracts, which is very calm and subdued on both measures. Remember, we had in our notes, we had ECB's Lagarde to speak today, ISM Services, and the Apple Developers Conference is today. We're getting started on June the 5th with 155,000 in the overnight on only 13 points of range. Now, the way I get that 20 points right there is just to go to the trade tab and dial this over to SPX. And it'll come up with, for June the 5th today, it'll tell you right over here on the right what the expected move is for today. Plus or minus 20 is what it was. We're halfway through the day, and now it's plus or minus 11. But earlier today, it was this morning, it was plus or minus 20. So, all right. Now, we're gonna look now at how to come up with targets and where do we get that line in the sand also. And this could be somewhat subjective. You could do the same thing and come up with a little bit different idea of what to call, line in the sand or whatever. It's not that I'm right. I'm just showing you how I do it. So here this morning before 8:30, we don't know anything. We don't know anything yet about there and to the right. All we know is what we see to the left. We see this morning, we see to the left, we see that, remember, the high was 93, the low was 80, the mid VWAP we're at about 87. The prior settle, by the way, here's where I get that prior settle. You can get it two different ways, but you go to the CME's website and just go under the E-mini S&P and then under the settlement field right there and look at what was your prior settle. Settle was 88, 42.88. So I got overnight mid VWAP and privates and prior settle all stacked on top of one another on an average of 87. Okay. The settle was 88, but a lot of that other stuff in the overnight was actually 87. So average 87. So we don't need that any longer. So that's at the CMEgroup.com. CME's website is where I got that information. You can also get it by this. Look, if this morning this thing is at 42.90 and you look up here and it's plus two, well, then settlement was 88 because your plus 13 now is going to be against prior settle. So when you come in, if it's 42.89 and you look up there, it's plus one. Well, you can do the math real quick and go, well, settles at 88, obviously. You don't have to go to the website if you don't want to. I do, but you could kind of skip that step if you want, right? So, all right. So now I keep a kind of a history here. Look at the history. I mean, I'm all the way up to 4808 all-time high, and I can go all the way down here and be all the way back to the uh, low of 3,500. So I've got a history of and what matters, right? To me, at least, I'm saying like, okay, if this was, the high of 22, then this is this, that, like that. And all the way into like even today, 43.27, that was the high for the first half of 22.08 would make a bull target. What did we just trade, by the way? What did it just hit? Like 06? We have to show, where we come up with an idea for a target of 08, but that's what I would call a bull target for today. 98 was the prior session high. I should put RTH, but prior RTH, i.e. Friday. 87 was the overnight mid VWAP point of control and prior settle. That's going to be our line in the sand. And then we want to come up with some bear targets. How did I come up with those today? Well, I look back, and I'll show you in a minute. I'll show you my chart, but I look back and I go, okay, well, my daily pivot is at 72. Remember, the overnight low was only 80, so it's never traded daily pivot yet. So if it's bearish today, I'm definitely targeting daily pivot. Anything below the overnight low, you've got to have your sight set. See the red line right there, 71.75. I just labeled it 72. Anything that starts to break, you got to target 72, because that would be to exceed the overnight low and be tracking for something. Oh, daily pivot. Has it traded pivot yet? No, it did not. Okay, that's a target, because I know about 4 days out of 5, that thing will find its daily pivot, right? And then below that, we've got a really, I mean, we wouldn't even need a 68, but 53 would be weekly pivot. Now, the weekly pivot, what is the daily pivot? It's the prior session high, low, close, add, divide by 3 equals pivot. It's always the same, but you don't have to worry about that. All you have to do is put the indicator on your chart, and the chart will figure it for you. But to get pivot, there's a standard calculation for it. It's the prior whatever, because maybe we're talking about weekly pivot. Okay, well, that's the prior week's high, low, close, add, divide by 3. What about the hourly pivot? Okay, well, the last hour, high, low, close, add, divide by 3. That's pivot. And so that 72 right there, daily pivot, that was Friday's high, low, close, added, divided by 3 equals pivot. And so what I do is I go and get from this chart, my TradeStation chart, because it's easy. I go here to get my weekly pivot, because it auto calculates it for me. I'm sure we have a simpler indicator that would do it too, but as you can see, it's labeled there, weekly pivot 53. So what I do Sunday night is I come in here and label the charts for everybody in our trade room and go ahead and manually adjust the weekly pivots around for S&P, NASDAQ, Dow, Russell, gold, bonds, and crude. We manually calculate and get ready, for those pivots. And let's see, where are we at now? How do you get that volume stuff? So in Thinkorswim, I'll go back to that chart for you and show you. In Thinkorswim, it's just their standard indicator called volume profile. Just take an empty chart, go through the indicators down to the V, everything's alphabetized, down to volume profile, and put that indicator on there, and it'll automatically populate it for you. Anything that trades volume, like S&P, but that is actually a true statement, because try to do a volume profile on an SPX. You can't do it, right? Because it's only options contracts. But anything that trades volume, that means you could do the same thing for Apple or Microsoft or anything, really. That's how you get that, though. And then what I want to know about that is 3 things. I want to know, well, maybe 4. I want to know my point of control, a value area high, value area low. That's the three things. And then one more also that I kind of like to include in there, and that is the general, in general, like the shape of this. That's important. The shape of it's important. Like, for instance, and here's an example of exactly what I'm talking about. Look at the blue profile here. That's Friday. The shape of this is very important. You notice the move up, and it finishes near the high, really almost at the high, near the high, certainly, for at the end of the day. Notice it also carried the point of control up to the high at the end of the day with the close. That's very important, because what that's saying to you, if you read the shape of this profile, what that's saying to you is this thing basically just ran out of time. Had it more time, it would have traded higher. Likely, I would assume this thing would have traded higher had it more time of day. Because clearly, if it brings the range all the way to the high, goes out at the high, and carries the point of control out with it at the high, then it's saying we're accepting these prices at the high. So that would be an indication for you to suspect greatly, but you can't assume, but you want to suspect that when you get into Monday's trade, you want to kind of be thinking and leaning a little bit bullish. Yeah. So, all right. Let's see. Go to another chart, and then Voodoo lines, quants, give it to you. The quants I look at for the week, not really for the day. I know that some do 007, like John. I know he uses like a 2-hour quant or something like that for the day. I pull up I've got it ready to go. It's one of my drop down, like, quick, links here. I'll go to it and have an idea of what the levels are for the week. 43.60s on the top and 42.10s on the bottom. But I don't spend a lot of time with that. Just, where they are. Like what I would do with this, honestly, is I would look where this is, and then I'd wrap a iron condor around it for the week. All right, I had an idea. I was going to go this chart. All right. So what I've got here is David Starr's micro voodoo lines, which are for each individual day during it's, in other words, like, these are intraday voodoo levels. I want to know where these things are. This is, you notice when I had my plan up a minute ago, I had a daily bearish target. See the bear target right there at 68? That's a micro voodoo. That would be a reason that I came up with for having that as a bear target. But if and only if it's weak, right? Below 86.7, really, below 87. And I mean, that's not a bad plan all in all, when the low today was 86. And then over here, I've come up with an idea of some targets. I had 13 up here, I believe, as one of the bull targets. I want to go double check that. I really meant to. I don't think I ever put it on there, but let me look. No, I skipped through it. I had 8s and 27s. Really, 13, honestly, should have been one of my bull targets up here. 8, 13, and 27. And I say that because now we know more than we knew when it was only 8 o'clock and we hadn't even seen the opening bell yet, right? Look at what this ends up being up here, but yet it also ends up being, and this was not known before the bell this morning, but it ends up being a range extension on the initial balance at 13 as well. So, well, listen, it doesn't need to be complicated. It does not need to be complicated. Look at this chart that you're looking at on the left over here. That's a 39-minute chart. Okay. I can go back and look here on this chart and find some what appear to be pretty critical, crucial kind of, levels with really pretty easily. I mean, notice that anything really below 78 ES, notice how it got to there very quickly. Look at the string of single prints. I mean, it's pretty thin all the way down to like 57. So, if you look at this chart, just pull up a 39-minute chart. We're not trying to be rocket scientists here. We're just looking at price action. We're saying, look, this thing got from 50s up to 80s really quick in a hurry. Like that means if it slips below that 78, it's got potential to really slip and fill in. At some point, it will this week too, I got to feel. Right? Because that leaves it really thin back here. You got to imagine that surely at some point this week, this thing's going to pull back in here and fill in this thin print area, right? Nobody knows, nobody sees around corners, but I wouldn't be surprised for that type of price action. Another thing you can do is pull some fibs, drop some fibs around and see if it happens to align with anything that you're looking at. For instance, look at this from Friday, low to high. What was the overnight retracement? It's a 236. It was a 236. That's all it was. That's all. That was a very small fib retracement from Friday. Ooh, look at our with that little bear target we drew in because it was David's voodoo fire line. It's also a 236 on a bigger move here. On the bigger move from last Thursday's low. Just I just want to know things like that. It's not rocket science. I'm not trying to make it seem like I found the Holy Grail or anything. There's a question about the roll that's coming. Yes. So there is a roll, and it's going to be an interesting one. The roll, let's go and look at that. The roll is in 11, well, the expiration, I guess, is in 11 days, which means that the roll will be next Monday morning on the 12th. It used to be this Thursday, the Thursday before the third Friday. However, the CME is now saying don't do that anymore. The CME came out and advocates now for use the Monday of the week of quad, which for the roll. So it'll be Monday on the 12th, where the expiration will be on the 16th. So in 11 days, this June contract is going to go off the board, and the new front will be the September's, the 43.35 price. Well, what's interesting about this is look at the difference between price at 42.93 and 43.36. That's like 43 points or something. That's pretty big. So that's quite the spread then now that will be back between the ES and the SPX. It also means that you have a rollover gap, and the rollover gap will be bearish, but not big. It's like 43 points. I mean, you could do that in one day, right? It could trade back. The rule for this is the new trades to the old. So if the new is going to be September and that's higher than the old, for the new to trade to the old, it's got to drop, right? 43 points. It's not a big deal. It could do that in a day. But that's the rule anyway. And there is quite the substantial rollover gap. And that's got to do with the cost of carry for that, with interest rates now being what they are, and this being a $200,000 notional value of product, and you're carrying that much weight for that long at those interest rates, and the dividends that the S&P 500 stocks pay during that period of time, it creates that spread. It's that cost of money is that much more for that length of period of time. That's the way it works. Just part of it. If you don't really want to get into all that, it's not a big deal. You can just say, well, that's just part of it. How do you leverage that difference between contract prices? Well, I used to have a trade that was really, really specific for the rollover gap. And it was that on Thursday morning at the opening bell, we would trade for that gap. And in the case of back at that time, interest rates were a lot lower. So the spread was smaller. Say it would be an 8-point rollover gap or something. We could get about 11 or 12 points worth of target out of an 8-point rollover gap. And so we would leverage that by having a very specific trade plan for the rollover gap. Now, though, I haven't figured it out yet. Again, that the CME is now advocating for you're using Monday for the rollover gap versus what it always was forever and ever, and that was the Thursday before the third Friday. So now the roll happens on a different day, and I'm noticing that the rollover gap happens at a different time. For instance, I've seen it happen in the last couple of times. I've seen it happen on the Friday near the close before the Monday, and I've seen it happen on the Monday as though it were the old Thursday type thing, right? So I don't know what the trade is now, as far as trying to make a day trade for the rollover gap. Look for it to be bearish 43 points. I can tell you that. And 2, start looking for it to happen somewhere late in the day on Friday. It might be Friday. It might be Monday. I don't know. That would be this Friday or next Monday, though. Until I get some more history to better define the actual trade setup, then I don't really have a rollover gap trade setup any longer. For the ES, I'm still doing the bonds and all that kind of stuff. We still have rollover gap trades for those. So your question might, though, have been, and you're saying, how do we leverage that? You would not do things like sell the September and buy the or buy the June or something like that. You would not do that as like a spread trade, because they're going to move in perfect harmony with one another. So that definitely does not work. That's the best I got for you. I don't know. It's a different environment now. The CME is saying, hey, let's do this now instead of what we've been doing for the last 15 years or whatever. We're going to do it differently now. It's just things change. Anything else? Any other questions? If there are questions in this restream thing that's going on YouTube, I don't see them. I don't see where the chat is on that. Hopefully I'm not leaving anybody hanging on that thing, because I really don't see where the questions would be there. Shouldn't this be bearish for the ES for the week? Any stays historical show it's a down week. Well, it would be the end of the week. Yes, it would be the end of the week prior to the expiration, which makes it the pit bull. It makes this week a potential for a pit bull low. If you're familiar with that setup, Marty Schwartz's pit bull low of a bearish trade into the latter part of the week prior to an expiration, monthly expiration. I put on short trades last week, at the end of last week, to benefit from some potential for some breaking price action this week. I don't know if they're going to work yet or not, but what I know is I've got a lot of long stuff in my book that's going to get hurt by this thing pulling back. And so I've treated it as at least insurance policy, right? I mean, at least that. I put on like 4150 ES butterflies and 335 or something Q butterflies. Part of my reason for that too was if this thing does just run into whatever reason, some profit taking, and it starts to pull back, what I would be on guard for would be the fact that this NASDAQ is really rich. I'll give you one example of what I mean. Here's what I mean. The NASDAQ traded from, let's go in Q so you can see it, on a NASDAQ to ES basis. This is part of your thinking, part of your plan, part of your getting ready for the day too, is it's moving higher for now, and it's moving higher as long as it's making higher lows, but that doesn't include tomorrow. What if tomorrow is the day, right? So, okay, then what do I need to have on my mind? Here's one thing you have on your mind. This thing came from 13,500 all the way up to 13,000, maybe 600, 13,600 all the way to 14,700. While the S&P advanced 100 and some change. That is grossly out of sync. All right. Normally, on a high average, the NASDAQ would maybe move 5 to 1. 4 to 1 is average, but 5 to 1 if it's stretched. That's 10 to 1. That's stretched out to 10 to 1. The NASDAQ is leading. Remember, I told you year to date, the NASDAQ's up 30% and the S&Ps were up 12. Now, they're going higher for right now, but I don't see around corners, and maybe that changes tomorrow. So if it does, then I need to be ready for then what? Well, if it got that rich that fast, it slips, and it could slip back into, easy 14,000, probably 13,900, something like that, which would bring the Qs, which is what I did, because you can do these super cheap on some like butterflies. Back into 335. I did them like 20 wide for like 15 cents. It ain't gonna get hurt. It's not gonna get hurt. But I'll tell you what will get hurt if it pulls back like that is the longs that you got in your book. So there's some insurance. That's just me getting ready for if then that. All right. All right. That's what I got. Hopefully it helps. I mean, that's how I go about getting ready for the day. It starts with an aerial view on how things look, and then dial it down to, okay, what about the overnight, how much volume and how wide the range, and then go and look for the expected move and range for the day. And with that, start looking for targets. And a lot of those targets, you can do it with a chart. You don't have to have the tools that I've got. I've got micro voodoo lines. If you have the means, I would definitely get the micro voodoo lines. They're really, really good. They're very helpful, but not everybody's going to want to purchase an indicator. You can do it by looking at the chart. Like I was saying, going back and looking at a 39, I'd use 39, whatever minute chart, and look for areas of price kind of inflection, and do that within the approximate means of the expected move, and you've got a good plan. You got a better plan if you know how to utilize that overnight information in helping assist in making a plan, i.e., if there was 40 points of range and 250,000 contracts traded in the overnight last night, I will tell you, buckle up, Buttercup. It's about to get real. And I'll tell you this too, you're about to experience a 50-point range day as it is. And there were 13, I think we said 13 points in the overnight range on mild volume. I'm going to tell you, like I told everybody this morning before we got going, I was like, don't look for today to be all that exciting. It's going to try higher and try lower and come back into the middle. And by the end of the day, you'll be scratching your head wondering, why did I even? Yeah. Do you still have a heads up for June 8th? No. And great question. No, because the debt ceiling deal was resolved and Biden's already signed it. So that was, remember, D-Day for if there's not a deal in place by then get ready for craziness. However, since that deal's been inked, I'm not as concerned about the 8th as certainly not for that reason anyway. That was a important day on that issue, but that issue has been resolved. So, all right, I think we're good. If I've gotten all the questions out of the way, then let's wrap this one up, call it another session, and wish everybody a good rest of your day.